Folks, you knew I wasn't going to miss this one. That's right, we're talking about Tesla earnings today. I hope you're excited. The stock showed a 5% gain so far in after-hours trading, really to kind of make up for the 5% downward movement they saw during the day. If you're curious on why you saw downward movement during the day, a lot of it was, in my opinion, there's not really a main factor for it. Mostly it's going to be as a result of Netflix earnings, not simply because they're related, but they're related in the fact that they are high PE ratio companies, and because of Netflix getting rocked by 30+% in one day, it kind of made the other high PE stocks a little bit jittery, and they were jittery. Tesla was definitely one. Coming into this earnings, I think the sentiment was relatively negative when you consider the increased cost of parts through inflation, as well as supply chain costs, as well as just potential for limited deliveries in China due to shutting down production at one point. So there was a lot of negative factors coming into this, but let's just be clear, folks. I told you in our earnings video, you should expect a beat from this company. We can calculate it based off of the delivery numbers they gave us over the last 3 months. They do it monthly. They'll show you the delivery numbers. And with those numbers, we were able to see that we knew this was going to be a beat, folks. We knew. Obviously, barring any difficulties with the solar segment or whatever that might come to. But yeah, let's go ahead and get into these earnings and see what's going on. First, you have to preface it's been a pretty rough year for Tesla so far. Year to date was down 18.5%, but still showing a 31% gain over the last year. All EV stocks have seen a pretty rough year. Year to date, and a lot of them are really down pretty big when you look at a year out. So Tesla's been one of the ones that's been really holding steady, all things considered, compared to the really the competitors in the game. So let's get into these earnings. And you see really nice stuff here. This is one I wasn't too sure on. This non-GAAP EPS line of $3.22 beats by 95 cents. I'd love to see what the net income line looks like, because that really is important when you look at the margin. Vehicle margin is a key aspect of this company and how they're able to really transform the future given rising cost of parts. I'm curious what that looks like, and it may not necessarily impact them as much this quarter as it could next quarter, so we'll keep an eye on that. But the revenue line is absolutely a smasher. $18.76 billion, up 80% year over year, beats by $920 million. Now let's be clear, I didn't really foresee this big of a beat. I didn't, so I'm impressed. I'll take it all day, folks. I'll take it all day. CapEx sitting at $1.77 billion compared to $1.35 of last quarter, and free cash flow at $2.23 billion compared to $2.93 billion of Q1. A little bit down in that aspect, so curious on that. Yeah, let's take a peek. So we had some other info that they gave during the call, and I think it's worth mentioning because they don't update that in the shareholder, or really the shareholder slides. So we're going to go ahead and talk about that today. One of the main things, obviously, they talked about vehicle pricing and product mix that helped offset inflation pressures, as I mentioned. Selling the more expensive vehicles and the more expensive models, and packages of those vehicles really helped them boost that vehicle margin, right? So that helped them quite a bit. Production at Shanghai was limited, as they said, and near-term margin headwinds in Austin and Berlin are anticipated as part of the initial ramp to scale up, getting back to where they were. But obviously for Austin and Berlin, they're still, these are new factories, so they're expecting a little bit of headwinds with margin following really the ramp up here, which makes sense. Makes sense 100%. But a lot of people were concerned about this production in Shanghai. Seeing as China is a massive potential market for them. Companies like NIO had to completely shut down production at one point, now doing limited. So again, it's not a shocker with the very strict governmental impact going on over there. The government's just, doing its thing. CCP, folks. I can't say that, can I? This is one thing I find pretty exciting here. Elon himself says that there's shooting for about 60% production growth. That's pretty significant to produce 60% more vehicles is pretty nice. But one major thing here is he talked about a new dedicated robo-taxi potentially. That will be extremely low cost per mile. Obviously, robo-taxi fleet is a big aspect of the future for this company. They're really focused on that, having no one driving your taxi when it comes to pick you up. Really exciting. It's like Uber, but you don't have to pay $90. You don't have to tip them, and if they're you don't have to worry about them being a piece of garbage, because sometimes they are. Never used an Uber, never will. I'm going to stay out of people's nasty cars. I'm not going to do it, folks. I'm not going to do it. And I'm not letting any in my car. That's right. The robo-taxi vehicle slated for production in 2024, still a little bit far out. And the Cybertruck expected to go into production 2023 in the Austin Megafactory. So, yeah, excited to see. Okay, that's really as far as the extra stuff there. Let's get into the slides as we like to do. They highlight a couple things here. Nothing crazy as far as this cash one. GAAP net income, oh baby. $3.3 billion of GAAP net income. We will see how that compares to what they saw last year. And 32.9% automotive gross margin, which is really nice for them, all things considered. Really nice. Let's be clear. Really cool from an operational standpoint. A lot of people excited in this. Production has started in Berlin and Texas, just started this month. Berlin last month, they just started producing vehicles finally. Obviously a whole new market for them when it comes to Europe potentially. A lot of opportunity there. And Texas, they'll be producing obviously the Model Y as well as the Cybertruck down the road. So that is obviously something pretty cool from a standpoint of operations. Here's a nice financial summary, very bland and dry for a lot of people, but this is the kind of stuff that I love, folks. I was gonna say something a little risque, and I'm not gonna say it. All I can say is don't pan the camera down when I'm looking at financial reports. Whoa, baby. Sorry. Sorry. The story I like to show here with Tesla is this this automotive gross margin. You've seen significant growth there. And that's really where they're able to boost this net income line by a massive amount. Automotive revenue does show continuous growth, massive stuff, massive here. 87% year over year is really nice. So what can I say? Very nice to see. Total revenues rose 81. Obviously that includes solar and Tesla insurance, which we'll get into that as well. Net income attributed to shareholders, worth mentioning. This is a line that is absolutely going bonkers for this company right now, as they're able to grow that vehicle margin finally. And they just started really posting profitability in the last couple of years. So this percentage growth is obviously massive for that reason. And eventually the percentage growth will slow down, but they're really headed in a great trajectory. You can see only $438 million of a year ago's quarter. $3.3 billion this quarter, 658% growth, and it's consistent growth throughout the quarters, as you can see. So pretty exciting if you're a Tesla shareholder to see those numbers. Obviously, that was a concern for the longest time, is when will they get to profitability? And here they go. Average selling price grew. Obviously, they said that was because of product mix, so that's cool. Product mix. That's right, baby. Here's the delivery numbers. Model S and X, you can see the Model S is really the main one here. Continue to show growth here, which is pretty nice. No year-over-year comparison because obviously next quarter they will, but that's going to be a massive one. But biggest model for them is obviously the Model 3. It includes the Model Y in there, and obviously I do believe once they start to mass produce a lot more, they will separate those two into different vehicle categories as well as the Cybertruck. So just keep that into consideration. But you saw 61% growth in the Model 3 production, and deliveries saw a 62% growth. You also saw total deliveries as a whole grow 68%. Yeah, pretty nice. I mean, Model S here, deliveries massive stuff, right? They're delivering a lot of these. They produced a lot. Now they're finally delivering on those, so that's good to see. So, solar units deployed down 48%. Again, the solar, it's not really a core business that I focus on here. Store and service locations did increase 20%. They're increasing that. Mobile service fleet, we're talking about autonomous taxis in the future. Exciting, 35% growth there. And supercharging stations up 38%. Connectors up 37%. Obviously, that is an essential part of the infrastructure right now. If it's possible to support a mass amount of people getting into electric vehicles, you will. You're gonna need more chargers. You need more charging stations. That's the only way to do it. So really interesting stuff there. In April, obviously, they talk about beginning the Model Y deliveries. Could be a massive win for them, seeing as it's the first SUV model. We'll see what that looks like. They're an early ramp up in Berlin and Texas. And obviously, the Cybertruck is going to be done in Texas. And then the to be determined is the Tesla Semi, the Roadster, and a future product, which they'll include the Robo-Taxi in there. I don't know if that's that, and they just didn't update it. It's potential that they didn't, but could be the Robo-Taxi in there. But yeah, there's a lot of things going on for them for sure. You can see the market share of Tesla vehicles. This is one that's pretty impressive for them. Pretty well growing consistently here. U.S. and Canada exceeded 2.5% of market share in vehicles, and it's growing quite steady. The question becomes, how in the world does that continue? Does that trend follow that way, or when does it start slowing down? Because I do believe, if you're a shareholder in this stock, once you start to see a bit of a slowdown and they reach potential market, potentially the peak of their market as other electric vehicles get in the game, that is when you might see a bit of a concern with this share price, just due to the fact that it's trading at such a ridiculously high multiple at the moment. But anyways, as we progress here, it mentioned Shanghai, obviously. Spike in cases in Shanghai resulted in a temporary shutdown of our factory because the government told you to, or else they would put you in an internment camp, or potentially just, off you right there in the streets. That's just kind of how they roll in China. Kind of Australia, too, if I'm being honest. That's kind of what they did there, too. Just saying. Yeah, so there we go. Nothing else really crazy. Yeah, nothing else crazy to really show on that in that aspect of my perspective. The outlook, what's significant here? Not anything crazy. I would mention this product category when it talks about the pace of production ramps in Austin, Berlin will be influenced by the successful introduction of many new product and manufacturing technologies. Mostly, obviously, they're talking about the Model Y here, but and they're making progress on the industrialization of the Cybertruck, how to mass produce it, given the technology they have. Yeah, but obviously the Model Y comes first, folks. Here comes the Gigafactory in Berlin as they started delivering the first Model Ys. Pretty exciting there. Look at Elon. He's looking joyous. He's looking joyous. Look at that. They got dang sparklers out here, folks. That's how excited they were about this. It actually looks pretty cool against the car there. I do actually like the look of that. That's pretty sleek. The Texas Gigafactory, the Cyber Rodeo, the opening, opening day basically for the factory. Pretty cool for them. They did a big event, as you can see, and that's pretty exciting for them. Look at this. That sounds like a fun time right there. They had a great time, having a good. Is that a food? Food trucks, baby! I wish I was there. Yeah, that's exciting stuff. So. That's how that's going. So key metrics, obviously, trailing 12-month lines here, pretty good in this aspect. You can see from a delivery standpoint, continue to grow. And here's the trailing 12-month line that I like. This is how you can see a massive ramp up in vehicle deliveries, pretty significant. So it's good to see in that aspect. And then from an operating and free cash flow standpoint, you see consistent growth. Especially this net income line is growing by massive margins. You look at Q4 of 2019, wasn't posting profit. Q1 of 2020, no profit. But they've been able to grow quite significantly. So, yeah, when we get into the financial statements, I'll get to the balance sheet. Then we'll take a peek at the stock and just let you know how I'm feeling here. So, from a balance sheet standpoint, Tesla's doing some good things. We are going to look at the far left and the far right categories, very polarizing politically, to look at both far sectors. But we're going to do it right now, folks. Right now, sitting at $29 billion of total current assets versus $24.7 billion of the year prior. Main things you'll see here is a growth in accounts receivable and this inventory line, right? This inventory line is up quite a bit as they're able to ramp up production. So pretty cool. Total assets in general at $66 billion compared to $52.9 billion. There is massive growth there, and a lot of that, as you can see here, is in this property line. As you saw, they increased the amount of locations by a good margin, a good 30% year over year. That's where you see a good bit of that growth there in long-term assets. From a liability standpoint, total liabilities at the moment are sitting at 30.6 compared to 28.5. They were able to grow assets by quite a bit much more in the last year. So it's pretty awesome because you look at the shareholder equity. But brain, can the brain work? There we go. The brain completely shut off there. Shareholder equity sitting at $34 billion on this balance sheet compared to 23 of just a year ago. You can see where that net income's really churning in and helping them massively. Not a company that's got a ridiculous amount of long-term debt, and you see they've been able to pay off a massive amount of it. Look at this this debt line. Just a year ago, $9 billion, now sitting at only $3 billion. Really impressive. They've been able to steadily chunk away at that, which is why I like kind of seeing this. I do like seeing the five quarters at once here because you can really see where that difference comes. So I appreciate whoever's setting up this chart for me here. I love it. But yeah, they're doing really good to get rid of that debt. Now let's get into what we think about the stock, folks. Let's just keep this in mind. This right now is a stock trading at a market cap over $1 trillion. Does anyone see anything potentially wrong there, right? $1 trillion market cap, but the company itself is bringing in annually, let's just be clear with each other, last year brought in $53.8 billion. If they grow by the 80% line, we're going to be talking about seeing around, let's say $85 billion could be what they bring in revenue this year, and that's on a forward basis. And they're trading at a market cap over $1 trillion. That's an incredibly high price to sales, right? Compared to the current market right now, over a 10 is a ridiculously high price to sales, and you have to do a lot of good things to really earn that at this point. PE ratio going to be sitting right around 200. This is a darn expensive stock. I can't lie to you, but the forward PE ratio looks a lot better as they're able to grow the net income line significantly. Just in the current market, if there's anything negative that happens to go wrong with Tesla, I have a big concern. This could be one of those stocks that sees not necessarily as much of a, smash as Netflix because they completely shrank their business. So I get that. The business shrank for Netflix. Tesla won't do that, but if they see negative news come their way, there's a good chance this stock, given that it's such a high multiple right now, you can see what other stocks have been doing that are trading at such high multiples. They're getting shmammered. I'm not a buyer of Tesla at these levels. I do think there's a lot of money to be made in Tesla potentially in the future, but at these levels, in this market, I can't trust it. I hope you have a great day, folks.